Hey everyone.
Hello. Good morning.
Thank you everyone for being here.
Hi,
All right,
hi.
let's get started. So, this is episode 11 of the Stablecoin Builder series. And this webinar is a monthly live session for founders, entrepreneurs, and operators building products in the stablecoin space. So, we cover topics for projects at every stage of growth, from idea to funding to shipping. And we run these sessions to help the stablecoin ecosystem grow by tackling real infrastructure challenges together. All right, so before we start, just some housekeeping, right? Just along the way, if anyone has any questions, please feel free to drop them in the chat throughout the session. We'll address as many as we can at the end, right? And to start off, who are we, right? Who is Utila? Just a quick intro for those who are new. Utila provides fintechs, banks, and enterprises with infrastructure to build and manage stablecoin and digital asset operations. We serve over 300 institutions across payments, treasury, trading, and more, right? And today we help secure more than 25 billion in volume every month. And also a bit about myself, I'm Shan Tan. I'm an APAC Director at Utila. Before this, I spent a few years as head of APAC at Figment, building institutional staking infrastructure across the region. And before that, I was at the institutional side at Anchorage Digital, and earlier still trading FX and precious metals at Deutsche Bank. So most of my career has been sitting at this intersection of infrastructure, yield, and how institutions actually move money, right? Which is why I'm pretty excited to be moderating this one, which is about stablecoins in APAC. So before we start, let's give some time for each of the speakers to introduce themselves. On the panel, we have Larry, we have Samyukta, Dawn, Yudha. Maybe let's start with Larry, if it's okay.
Of course. Thank you, Shan, and it's a pleasure to be on this webinar today with Utila. Thank you so much for hosting and for inviting us, and really great to see some familiar faces here today as well. So quick intro about myself. I am Larry. I am currently the head of the BD, co-founder and Ratio. We essentially provide zero slippage on-chain swaps for regional stablecoins in Asia, which I'm more than happy to, which I'm sure we will dive a little bit more later down the session. We're incubated by Kaya Foundation, which is a EVM L1 that's Asia-focused, incubated by Lion Cacao. So really excited to be on this panel today and sharing some thoughts about APAC stablecoins with the rest of the guests.
Thank you so much, Larry. And maybe we can move to Samyukta.
Hi everyone. I'm Samyukta. I also go by Sam. I'm basically the infrastructure and partnerships manager at Startale Group. So Startale Group has a number of different initiatives, but the biggest one right now is JPYSE. So this is basically a Japanese yen-backed stablecoin. We are doing this in joint venture with SBI Bank, one of the biggest Japanese banks. We just went live with JPYSE just a month ago, June. It's essentially a trust-backed stablecoin. So this is structured as a Type 3 electronic payment instrument under Japan's Payment Services Act. So it's fully regulated. And so this has been the major focus for us. Besides JPYSE, we also do have another stablecoin called USDSC. So this is a USD-backed stablecoin, but this is actually a yield-bearing stablecoin that we are developing with M0. So really happy to be here today to discuss on the topic of stablecoins in APAC. So thanks to Utila for having us here.
Awesome. Thank you, that. Next, maybe move on to Don from BANXA.
Hi everyone, my name is Dean. I'm the head of strategic partnerships at BANXA, so it's really great to be here today. So I work for BANXA, which is a fiat on and off ramp for retail and institutional clients. We're essentially the access layer that allows any business to integrate our payment stack and allow their users to on and off ramp between fiat and crypto. Specifically, we do a lot of work within the stablecoin space as well. So we embed that access into about 400 platforms, including MetaMask, Trust Wallet, Ledger, OKX, KuCoin, and many more platforms across a variety of different verticals. were recently acquired in January by the OSL group. So I work across both the stablecoin and payment products, USD Go and OSL's and BizPay. USD Go is OSL's regulated USD stablecoin, and that's issued by Anchorage Digital. And we've got OSL's BizPay product, which is our all-in-one B2B cross-border payment solution, which is built to sit alongside or replace SWIFT. And we have a lot of use cases for stablecoins and cross-border payments and trade settlements, global treasury and management, and emerging market payment corridors in Asia. And it's exciting to be here with my colleagues today.
Thank you so much, Dean. All right, last but not least, let's move on to Yudha.
All right, thank you so much, everyone. My name is Yudha. I'm a ecosystem lead for IDRX. I'm very happy to be here and share thoughts and experience about how IDRX grow within APAC and especially around stablecoins. IDRX is an Indonesian rupiah stablecoin issuer. We are since 2023 and incubated by Indonesia, which is one of the largest crypto exchange based in Indonesia. We spin off the company in 2025 and recently acquired by the number one crypto burst in Indonesia, CFX, which will give us a broad range of features and use cases in the future. So we'll be happy to share everything with you guys today. Thank you.
Thank you so much. Thank you so much. All right. So now that you guys know all the speakers, let's get started. So the first question, very simple, right? Like, why APAC? Why now? Right. So if you look at APAC, it's become one of the fastest moving regions for stablecoin adoption. Right. Asia now represents close to 60% of global stablecoin payment volumes. And I'm actually witnessing that myself, right? In Utila, in my previous role, in Singapore, Hong Kong, Japan, have all moved from regulatory frameworks to live licensing in the past year. So what's changed in the 12 months, right? And why is this region moving so fast, right? So maybe we can start with Dean from BANXA, if it's okay.
Yeah, absolutely. Well, I mean, like as you mentioned, it's important to kind of look at the regulatory frameworks that have been organised and built for each market. I mean, I think that we could probably agree that Hong Kong's pretty much made the biggest leap with the stablecoins ordinance, which took effect last year. And additionally, I think that's really genuine. It's purpose-built regime from going from law to live licenses within a year. And I think their approach is to be quite selective with their quite stringent approval rates as well. And when you take, Singapore, they didn't really legislate a new law, but they tightened supervision. And then, in Japan, they've always had really a really conservative view on this, and they've amended the Payment kind of Services Act, which permits the stablecoin issuance, right? So when you look at the changes there, they've been really, really quick over the last year. And in my view, I think APAC is moving fast because the pain points here, I think, are structurally worse than anywhere else. And I think what I've seen is what my view is that the region has regulators that are willing to build on that reality then instead of just necessarily importing a Western framework as well. So I think additionally, you've got a lot of local currency volatility in the daily operating risk for businesses and treasuries. And it's not really an abstract concern. So any kind of compliant stablecoins that meet practical risk management is going to be really important. And I think you're seeing a lot of as you mentioned, cross-border payments within fast moving economies where the old rails were they're too volatile, they bottleneck growth. So I think my view on the regulation side is that over the last 12 months, we've seen like the regulators stop treating this really as something to be like super cautious about, and it's not as abstract as they originally thought. And then, I think this is a really interesting move on the regulatory side. And I think that, what we've seen now is, continuation of billions and billions of dollars in and outflows out of APAC. Thank you.
Exactly. Thanks, Dean. Really mirror your thoughts, right? On how, essentially is an answer to some of the most key structural challenges in moving money across borders, speed, efficiency, and all the other benefits that stablecoins confer to the entire ecosystem here. All right, and maybe I'll direct the next one to Yudha, and it's as a follow-up question as well on what Dean has been discussing about. So when I look at Indonesia and I look at OJK and Bank Indonesia, right, still treating crypto as a commodity, not a currency. And IDRX, when you look at that, when IDRX existing as a regulated local currency stablecoin, how did that get built inside that regulatory posture? Just to understand a little bit better.
Yeah. This is very interesting case for us and stablecoin in general in Indonesia. Well, it's correct that stablecoin and all crypto was seen as a commodity, but the regulators, especially OJK, has been really active on monitoring and regulating the space since last year. Hence, I think this is a good news for us and all the stablecoin in Indonesia. They have a sandbox program, which is started last year and already one alumni from the sandbox just done the program this year. And following that, there is a new regulation. It's a law P2SK it's a law number 4/2024. It's a specific talking about stablecoin and digital assets. Now, this is the law from the parliament. The law is clearly stating that a stablecoin has been seen as a digital assets, and it's allowed for transactions, but not directly for payments in merchants or in daily life. So this is a good opportunity for us to build stablecoins around cross-border settlements, around remittances, around treasury movement globally, and especially from Indonesia or for in and out Indonesia. And soon, once this OJK study the law, and then they will derive the law from parliament into a specific or the technical requirements on how stablecoin should run, or how stablecoin should be regulated. So this is a very good news for Indonesia from our perspective. Yeah.
Yep, that's very interesting, definitely, and I'm really looking forward to be having more conversations, in the upcoming few weeks, Indonesia Blockchain Week and CoinFest as well. Now, next, as we look at Japan, right, Samyukta, right, if you look at Japan, it kind of took the opposite path, right, where it's bank anchored issuance only, right, via the amended Payment Services Act. So has that, in a way, slower, stricter approach actually helped, or do you think it kind of held Japan back? What's your thoughts on that?
Yeah, so that's a good question. Yes, as we know, Japan is definitely more conservative by nature. So they have actually structured it well. So I wouldn't say that it's actually held Japan back per se. If you just look at the progress, like where we are now versus 6 months ago, right? So we did manage to launch this JPYSE, and this is very much a trust bank back stablecoin, which means that there is kind of trusted assets and everything that are involved in the issuance of the stablecoin. So I think Japan regulators have done a really good job in this sense. They have started to actually, openly recognize this as a payment instrument. In the fact that there is another stablecoin in the market that's more existent just to retail, but has like a 1 million yen limit. So it's around, not too sure the exact nominal value, but if you look at JPYSC, this kind of surpasses the 1 million yen limit. So they are actually inviting. They are actually open to both retail and institutions sort of moving bigger chunks of funds, basically using a digital yen. So I think, definitely this hasn't been a big blocker. I think as time goes, the regulations will just continue to open up for Japan, given that even though it's going through what you might consider a slower bank anchor route, it is still the better route to go, basically, because you don't want to launch something and then just get shut down in, like, say, 6 months' time, right? So they essentially want to assure that once the product is live, then you're just kind of able to, like, slowly build up around that. So the actually getting the licenses, everything might be a bit more tedious because it is the bank anchored route. But eventually, once you're live on production and you have all your licenses in place, it sort of gives you a good free way to sort of building up the adoption of your stablecoin in Japan. So that's kind of my 2 cents on this.
Awesome. And I think it's kind of like tried and tested approach, across the different cycles, where we see kind of how Japan has insulated the market with their policies, and eventually it actually protected their users, the ecosystem there, right? So and also finally for Larry as well, right? So from where you sit building in this space day to day, right? I'm also curious, what's the single biggest change you have noticed in the last 12 months, right? Is it more something regulatory, like what's Yudha, Samyukta, Dean has been discussing about, or something more on the demand customer side? I'm curious.
Yeah, that's a great question. And to put simply, I think both, right? To Sam's to the point that Yudha and Dean brought up, I think regulatory wise, Asia has really picked up, especially what we're seeing this year. When we are building Ratio, we have always had a thesis that within the next 12, 24 months, perhaps even shorter, every major economy in the APAC region will have its own regulated stablecoin. I think it's just a matter of time, but we're definitely seeing regulatory landscape evolving differently across different markets in Asia. And also, I think that's where the opportunity is in Asia, right? Because it's so fragmented, things happen in different pace. But because of that, there's a lot more opportunities that's yet to be unlocked. So I see definitely on the regulatory front, more things are going to pick up, and you will be able to see more stable coins that is regulated come onto the market. And with that, I think the single most important thing, in my opinion, is it brings trust and it brings security to the end users. And sort of that segues to your second point, where we are seeing wider adoption, or rather, definitely wider interest to adopt local stablecoins. I think major enterprises in Asia have been looking at stablecoins, and we're always seeing new POCs happening. I mentioned earlier we are incubated by Kai Foundation. Kai has done quite a lot of POCs with leading Korean banks. So we definitely see institutions having an interest in adopting stablecoins. But I think the reason why things are slow, on one hand, of course, these larger organizations are just slower by nature, but also because regulatory-wise, things are still moving along. So I do see that there is definite interest there, and once the regulatory landscape flattens out, definitely there will be wider adoption, and especially when we are looking at B2B transactions, B2B settlements, because as I mentioned earlier, right, Asia is a very unique region in that it is extremely fragmented by currency, by different regulatory environments. So of course, in the traditional sense, moving assets across borders, moving value across borders is quite expensive. And I think this the APAC region really is a perfect environment for regional stablecoins to incept and to grow. And we definitely see that, right? We're seeing more stablecoins will come onto the market that is regulated. And the second is that once those regulations and stablecoins becomes available, more organizations in the APAC region will start to adopt it. We're definitely seeing that, right? Working with our partners, especially IDRX team is here today. We're definitely seeing existing adoptions. And now I think it's just a matter of growing that further as the market becomes more matured.
Interesting. Yeah. I definitely echo some of the points that you mentioned, right? Regulated stable coins, and faster settlements, atomic settlements across the different economies, merchants and payment service providers. So that's an interesting point. And now I'm also more curious after you guys have shared about different positionings of your companies. I'm interested to find out about where's real adoption happening today, right? So maybe first for Dean, right? So BANXA sits at the access layer, right? You are the plumbing that essentially lets people actually get into and out of stable coins across 30 plus fiat currencies, right? It's 30 plus, right? Correct me if I'm wrong.
Yeah.
But from where you sit, right, where is real repeat usage adoption happening across APAC today? Payments, treasury, cross-border settlement. So this part I'm curious about if you have any real life examples that you can share. Of course, no need to go into the names, but for the audience to really feel like where is the real adoption happening.
Yeah, absolutely. I'll put on my two hats, my OSL hat and my BANXA hat. So I was thinking about this. Adoption is really across all of those name categories. Like we're seeing it at BANXA on the retail adoption side. We're seeing it on the BizPay side with payments and treasury and cross-border settlement. And I think maybe it's a little less about one category winning and more about like where the friction could be worse, right? So I think you might have mentioned before, Southeast Asia or APAC, you're seeing about 43% of cross-border payments already through stablecoins. So and predominantly a large part of that is B2B flows. So when we're talking about the B2B products that we have at BANXA and stuff like that, at OSL, the cross-border payments infrastructure really has been built for this on our side. Like we go out there and we try to procure clients that really need trade settlement, need to move value between emerging market corridors, and we've organized a stablecoin sandwich with our USD Go product. So I think right now what we've seen is that businesses globally want a faster settlement than SWIFT, which we can do with local rails with BizPay, and they want payouts in their local currencies, right? If possible. One of the biggest corridors for us, as if you know anything about OSL, is our Hong Kong local rails, where we're able to do T+0, which is really amazing, right? Additionally, OSL has also built USD Go, which is a regulated, USD dollar stablecoin. And fundamentally, we've seen amazing growth, and we're really proud to be one of Asia's biggest operators. And I think I was thinking about this, what was the differentiator that the market needed? I think it's to do with the regulatory trust and the regional proximity that we have being in Asia, and additionally the value that it brings to the market. And so over the last 5 months, we've achieved $1 billion in circulation. Now, when I talk about the BANXA side, so BANXA is obviously the retail payment stack that plugs into wallets, right? And I think what I've been seeing is it's really about local payment method depth as well. For example, we've just launched QR payments in Vietnam, and we're looking to launch alternative payment methods in Indonesia. we know like the people want the ability to purchase stable coins for multiple reasons on the retail side. So we're seeing a big shift there. Like we're seeing that, you know, these countries are massively crypto adopted. So stablecoin flows are really natural, and the real usage is there. And so what we try to do is provide that optionality and opportunity with the least amount of friction. So yeah, like a retail market, you know, typically we're just seeing users purchase it to hedge against potentially volatile inflationary currencies. And additionally, as I mentioned before, you know, we're seeing a lot of cross-border payments, remittances, and everything else that goes with it on the B2B side. And it is real repeat. It is real repeat, especially in those, as I mentioned, emerging corridors between Africa and Asia as well.
Yeah, that's very interesting, right? I mean, I myself actually witnessing such flows as well. And if we kind of zoom into Southeast Asia, right? We're looking at something like 43% of B2B cross-border payments of the entire region that's actually running through stable coins, right? And when you focus on the Singapore to Indonesia corridor alone, right, process tens of billions annually. So maybe this is like a follow-up question to Yudha, right? I'm just curious as to, you know, what's kind of breakdown, right, for this Singapore Indonesia corridor flow? Is that still USDT, USDC, or like do you see it moving towards IDRX, right? As a, you know, as a regulated local option that's coming up, right? What would actually, what if you know, currently the flow is still more, you know, in the unregulated stable coins, then what would you see as a need for change in order for that to kind of flip over to the regulated option?
Well, yeah, this is a great questions, which is, it's true. Currently, the demand and what's happening in the real transaction is still through USDT, and our regulators specifically don't want it to be happen with unregulated stables here. So I think the best case will be using IDRX and the counterparty in Singapore, which is already registered, regulated, like XSGD or any other Singapore dollar stable coins. So the ideal flow will be within those two stable coins and the ecosystem within, whether it's exchanges, two exchanges, one in Indo, one in Singapore, or through ratio. We can exchange both currency in ratio and then have another counterparty to off-ramp it or to redeem to each local currency. That's like the ideal case that we are seeing right now, although it's still running on the USDT, unfortunately. But yeah, that's what we are hoping to happen within a couple of months or quarters. Yeah.
All right, thanks. Yeah, looking forward to also how kind of that narrative is shaping in the region. All right, so and in that case, maybe, you know, I'm also we understand, you know, what actual real adoption there is today. On that note, I'm also curious about what it actually takes to build the stablecoin products, right? So you know, for Samyukta, for example, when we're looking at Startale, right, building Stream with SBI, right, bank anchored regulated rail first, right? So let's say, right, if you were advising a fintech building stablecoin capability in APAC today, right? Starting from that same, you know, like work within the regulated system instinct, what should be at the top of their roadmap? What should they be thinking about, right, Samyukta?
Yeah, thanks so much for the question. So I think definitely when it comes to working within a regulated system or structure, right, I think they should have three major priorities. So the first one would definitely be to solve the redemption and structure before you actually just focus on features, right? So you can see in this case of Stream and JPYSC, basically what we are trying to tackle now by launching it as a type 3 instrument is, instead of having like a very small cap funds transfer token, is what we're doing is focusing on solving the trust or reserve question upfront with SPI, right? So we're able to tap into like those sort of capabilities and that sort of experience that banks have already with governments and dealing with regulations. So I think this sort of structural decision is what would actually unlock, block trade size use, which is the broader functionality, not just focusing on minor consumer features. The second priority would definitely advise that these sort of fintechs should still focus on going after the quote unquote boring or high trust use case before the exciting one. So that's also the same case what we are doing. So we're focusing purely just on the fundamentals right now, rather than just trying to hook users with a flashy consumer product, right? Because we know that what's going to last in the long run, if you just give your users something very flashy, they're just going to be sort of short-term users. But what we're really aiming for is the long-term adoption, right? So this is what we could generally say that this is something that fintechs could just take as a piece of advice to sort of prove the plumbing works and the foundation before you start to build on top of it. So once you have your base layer, then you can always go higher and higher, but you guys sort of need to buy the user's trust first. And then the third priority would definitely be to treat institutional and tokenized asset use cases as part of the roadmap, rather than just a stretched out goal. So in our case as well, being a bank-backed stablecoin and Ethereum as well, going to be a decentralized network, but still in correlation with SPI, we're sort of reaching out to different sort of tokenizers, asset issuers to kind of build up these equity funds that would be using JPYSC. So we could offer instant settlements on subscriptions, automated dividend distributions, and eventually sort of expand to DeFi, but we would still take a more structured and slower approach rather than just going too fast, too furious. I think it's obviously a very difficult approach, but this is just some sort of advice we could give on the priorities of how they could go about this.
All right, thank you, Samyukta. And also, if I'm looking at it from another direction, right? So, when you look at Startale, there's a lot focus, regulation. We need to make sure that the regulators are comfortable, bank first, on that route, right? And coming in from another direction, right, where we are focused on the product, having the best product, right? Larry, right? When you're building ratio right now, you're focused on how do we deliver the best experience to users. I'm curious about what capabilities do you think actually move the needle for adoption, right? On a similar kind of trajectory as what potentially similar to what Samyukta said, or is it something different, right? Versus what is actually built because it's technically interesting. So what are your thoughts around this, right? Is it product first, or are you going to be focusing on like bank first, fitting their requirements, their standards, but how do you balance between that?
Yeah, no, that's a wonderful question. And I just want to, before I answer it, I think it's a multi-layered question. But I just want to go back to the previous point that Sam made, and I think I really agree with a lot of the points you made, because I think, fintech stablecoin, it's a very special segment, I would say, and you really cannot be building this segment today, at least, without thinking about the regulatory front first, because to be, from our perspective, and I'm speaking with the partners, I don't think it's a matter of choice today. It is necessity. So yes, as a platform, building the best technical solution, UI, it's definitely top of our priority. And actually, to be very transparent, right? On-chain FX is not a new thing. It's been around for some time. And recently there has been some new teams alongside of us building in the same sort of segment. But everyone's sort of taking the approach different. The solution is different. So in the technical and product side of things, there's still a lot of energy that goes into actually designing the product, making sure that the product works, both on a infrastructure level, but also when our customers are interacting with it. But I think that is about maybe 50, 60, 7% of the whole picture. We also put heavily focus on the compliance side of things. And what that means are a few things, right? One, making sure that our organization itself is compliant, right? I think that's very important. But also second, only working with regulated partners or counterparties. And that's our actually, that's been our solution. That's been our thesis from day one, right? So as I mentioned earlier, we work very closely with IDRX team, because IDRX team has been one of the fastest moving compliant counterparty in Indonesia. We work in Japan with JPYC. We would love to work with Startale as well. So maybe after the webinar today, there's an opportunity for us to connect as well. We'd love to work with you guys. But we've been speaking with some clients, and one of the questions that people are asking us is, why you only offer such a small selection of stablecoins available on our platform? And the answer to that is, unfortunately, today there isn't that much licensed or regulated stablecoins in the market. Things are still being falling into place. So we've been really restricting ourselves from growing, because we really want to make sure that from day one, even though it might make our growth slower, it might make our operational cost higher, that from day one, we are positioning ourselves as a regulated middleware, and that we only work with regulated parties. And I think stablecoin settlement, as of today, is still very much B2B focused, right? Against one of the points Sam made earlier, I 100% agree with is, I don't think we are in the point where we have to be spending a lot of money on creating fancy customer-facing products, because we really think, at least today, local stablecoins, regional stablecoins isn't really for, say, mass consumers, because most of the people within their own markets use existing e-wallets, fiat rails that works perfectly fine, right? It's only when you maybe look at remittances or traveling that stablecoin becomes part of the play. But still, we think B2B is still the key. But with B2B, right, the UI itself, yes, it's important, but it won't be as important as saying you're building a consumer product. So for us, security, compliance, I think that is our main focus. And then to deliver a compliant, secure product, because at the end of the day, we're trying to be working closer with the institutions and B2B clients, and at least in our perspective, that is the key for us to focus on. I think in the long run will be an important differentiation factor.
That's great. Right. So, very agree on some of the key points you mentioned, right? Security, compliance, these are kind of the non-negotiables when it comes to stablecoins. And kind of I want to move into the segment where we are kind of asking, we were talking about what's working and what's important, right? So now I kind of want to move into where are some of the obstacles when it comes to stablecoin development and adoption. Maybe for Dean, right? We're seeing many companies, they're experimenting with stable coins. Based on what you have seen, what does it actually take to move from a proof of concept to like production in a market like APAC, right? So where do you see like many projects getting stuck right now?
Yeah, it's a good question. I think it fundamentally comes down, as you mentioned, to the regulatory frameworks. I think and the comments that Larry had mentioned before about not having a structured framework. Like if you look at the MiCA regime in Europe, that applies to like 43 different countries, right? So you've got one structured framework which you can operate in, and then when you go into Asia, as Larry mentioned, it's a lot about that fragmentation and trying to move operationally like within those environments. So you got to go jurisdiction by jurisdiction, right? Like there's no way of getting around it, and that requires like quite an amount of operational overhead. You've got to have like really slick local product and compliance teams. You've got to be able to work with the regulators within those markets. You've got to have like a local presence. You've got to set up companies You've got to have like sea levels and all of these kind of like to really operate in a lot of these markets. So I think like there's a real operational drag. I mean, like, I'm not an expert in terms of, you know, creating stablecoin products, but from the from what I've seen, the regimes and the setups can be quite cumbersome. But I think like, yeah, it's a very interesting problem to solve. Not one that I've thought about too deeply, but I think like really it's like, as some of the other my colleagues here, you know, focusing on single markets, developing what you need to do in those markets first is a good approach, in my opinion. And in terms of, you know, in terms of what I'm seeing as well, recently had a conversation. I don't know if you guys have heard of CP Group, which is responsible for like 33% of the GDP in Thailand, and they're building their own stablecoin, right, for True Money. And so you're seeing like, okay, we've got billions and billions of dollars, trillion-dollar companies here being able to enter markets and build a regulated backed stablecoin. And as Larry mentioned before, within the e-wallet. So there's really different things that are happening across Asia as well, especially in Southeast Asia.
Yeah, that's you know, very, very interesting, right? We're seeing some of these obstacles, and also thanks for sharing, you know, how they kind of get mitigated as well. And maybe the next one for Yudha on a similar tangent, right, where we see IDRX operating inside OJK's commodity, not currency framing, but you know, you have also shared about some perspectives regarding that just now, and still being fully regulated, right? So, from a practical standpoint, what did that path from pilot to production actually look like operationally, right? Based on your experience so far, where did it get difficult, right, in that whole process, and what are some of the learnings from that?
Yeah, definitely. I think the tech part, like smart contracts, minting, redeem, all the integration is the easiest part for on building stable coins, right? And the hardest part is actually making sure the ecosystems that we are building, like the payment gateway, the banks, like other necessary integration is fully compliant with what OJK wants, right? So in some cases, it's evolving every time, because when the first we work with the IDRX and collaborate with projects, transaction is fine on chain, on every chain, but there is a lately demand from OJK that every single minting, redeem, and transactions happen on the bourse, happen on the local exchange. Then we need to, smash our brain to like how can this happen seamlessly, because that's the most compliant way. What they see is like decentralized exchange is not compliant, but local exchange is compliant. But local exchange has some difficulties in order book and market making, right? Because it's the hard part is to make sure we comply on every single part, especially when the regulations change. So it was a hard part back then, but still we don't know what's gonna change when the P2SK document from OJK break down all the requirement from us. So it's the difficulties on the compliance part. Yeah.
And I believe a lot of it comes down to like, I mean, kind of communication, education with the regulators, what's feasible, what's not feasible, what's impossible, right? So,
Exactly.
Personally, I've kind of experienced that myself, across the different markets when I was engaging regulators. So definitely echo your point on that. And I think right now, and we've shared what works, and what's difficult. What are some of the mitigations in terms of stablecoins in APAC? And now, as I'm looking ahead, right, in the next 12 or 36 months, what do you guys think will have the biggest impact on stablecoin adoption across APAC? What are some of the catalysts or trends, or basically, what are your thoughts on stablecoin adoption? Yeah, it's open to all, anyone who has some thoughts around this.
Yeah,
maybe
maybe I
you-
start first. Yeah,
You
I
know,
start
yeah,
first.
okay.
Yeah. So, yeah, since the new law and OJK will break down the technicalities on how we should operate, I think this will open bigger room for us to explore on the cross-border settlement with compliance. What we see right now, we already have a demand from chambers of commerce of Indonesia that have a network of export and importers companies, and they really want to channel the transaction through stablecoins, and the counterparty here in Indonesia is IDRX, and yeah, that's what we're gonna see in the future for cross-border settlements. And the other opportunities that we see is on RWA. RWA, we also have regulations as well, and most of them will use stablecoins to either purchase or distribute yield, or sell the RWA back into stablecoins, and IDRX will have a huge role in that. Currently, there is no specific regulation yet that will state RWA should tie to local stablecoins to purchase, to sell back, to distribute yield, and this is something that we will see in the short term. Yeah,
That's interesting. I think when you move into the trajectory of RWA, right, and how kind of it coexists with stablecoins, and the kind of growth it can deliver to the whole entire stablecoin ecosystem as well. So maybe for follow up for some Yuktas, like we are seeing Japan's mega banks trialing yen stablecoins via ProcMet, right, targeting a 2026 launch, right? If that lands, if it lands, right, does it pull volume away from USD stablecoins in Japan specifically, or is it just adding another rail alongside? What was your thoughts?
Yeah, that's definitely a really good question. So I think, in my honest opinion, I think it would be adding a rail, and basically, I think it would sort of validate the whole category faster rather than just having a single issuer alone, right? So I think if you look now in 2026, we already have two stablecoins in the market. One is JPYSC and one is JPYC. So one, as JPYSC is basically has a sort of bigger approach where we can approach both retail and institutional, and then JPYC is more for the retail customer. And then we imagine that the mega bank project is going to be more explicitly B2B. But yeah, so details will be to be confirmed. But yeah, I think neither of us across these stablecoin issuers are sort of fighting for the same USD volume of stablecoins that actually is flowing in the Japanese market today. What we're actually focusing on is just purely building out these yen-denominated stable rails that barely existed a year ago, right? So I think in terms of this, we would consider that this is not exactly a fragmentation of the market. This is more of like a new market that's forming. So what we hope is that when we actually issue these new yen stablecoins, that investors who are previously not interested to sort of buy, to sort of engage with USD because it just might be too complicated for them to comprehend, they have a easier way for them to sort of enter the market by simply just using their own Japanese yen to hold a digital yen essentially, and then they could sort of enter different other markets if they'd wish to. So I guess, yeah, that's pretty much to answer your question short. We hope that we won't be sort of just trying to buy over the existing USD market. We hope to invite more other participants, new users who probably haven't touched crypto before, to sort of think about whether they'd like to use digital yen in their daily, something like performing payments, something like having their normal remittances is a huge use case for businesses, or it could even be treasury management. So that's sort of how we hope that this is how it's going to look for adoption going forward. No matter how many entrants may enter the market as us. So yeah, that's how we're looking forward to.
All right. Interesting perspective, Sam. And how about John and Larry, right? What's your thoughts, like in the next 12 24 months, what do you see, right, as some of the last few minutes, right? What do you see as having the biggest impact, right? Either Don or Larry can go first.
Yeah, I'll pitch in. So again, I think echoing one of Sam's earlier points, I think in the next 12 months, right? One thing, well, at least I hope, but I'm quite confident, is that there will be more stablecoins that will be granted licenses to be operating in different markets. And the second would be, once those regulations start to fall in place, more organizations will see adopting stablecoin as something acceptable into their day-to-day operations. One of the points I made earlier is that the opportunity here with regional stablecoins is not necessarily to replace existing stablecoin volumes, but rather opening up new markets. And I think that is really where the opportunity lies. And I think, again, for that to happen, regulations, compliance, licensees will have to fall into place first, especially for larger corporations that might have, legal implications, finance implications, right? They need something that is more comfortable. So once those regulations fall into place, I'm quite confident that in the next 12 months, the regional stablecoins will be experiencing, I think, relatively strong growth, starting in the B2B institutional side, and then from there on, trickling down to more consumer-facing applications. And that's the market that we are quite confident and very excited to see.
All right. How about for Dean? Any
Yeah.
closing thoughts?
Yeah, I really like what Larry and Sam are saying as well, just in terms of the adoption around more local stablecoins. I really do hope that that's something that does happen. I think at BANXA we're seeing just massive adoption of USDT in the Asian market that we've already discussed before. I think like around the next 12 to 24 months, as I mentioned at BANXA, like we're very, very focused on the regulatory environment. I don't think that you're going to see like a single landmark regulation at all that's going to necessarily lead to further adoption. I think it's just going to be, as Larry and mentioned before, like incremental licensing moves, market by market, like consolidation, and further retail adoption of stablecoins will lead to a more vibrant market as well. But I think it's going to happen just market by market, that's my view on that.
All right. Thank you so much, Dean, and thank you so much, to all the speakers here today. And yeah, I think right now is a good time to take any questions from the audience, right? I think we have a question from Martin, right? How hard is it to get from stablecoins back into local currency, right? So we're talking about off-ramp, right? Do banks in the region want stablecoins, or are fintech still pushing most of the adoption, right? So what do you wish banks understood better about stablecoin flows, right? So anyone would like to take this question?
I can talk a little bit about that on the payment side, if that's okay for a minute. It's like you've got to, as I mentioned before, you've got to go market by market. You've got to build those local rails into your off-ramping suite. It's tough, right? Like we still don't have a lot of local payment bank transfer methods in most of in Asia. We've on the BizPay side, as I mentioned, we've got HKD local payouts, and some of the other Asian markets we're still using SWIFT. Additionally, you know, BANXA on the retail side, we do see this as we have a whole strategy built around emerging markets in Asia. So we have a whole goal there to build out things on the retail side. I'm not seeing a lot of demand from banks necessarily at the moment. The demand is coming from, you know, fintechs. It's just pushing. In what I've seen is, you know, almost all the adoption. And it's going to be hard to change the mindset of banks. I might defer to some of my colleagues who might have a bit more specialized relationships within that cohort. But yeah, I think it's going to be a little bit tougher. But I still think there's definitely room for that knowledge to grow within that industry.
All right, thanks. And anyone else from the speaker panel that would like to address?
Yeah, happy to jump in here. I think since we do have the sort of pleasure of working with banks, right? If we have a unique relationship when it comes to sort of helping this stablecoin initiative go through, because Startale Group itself has more expertise in obviously blockchain, cryptocurrency. We've built a bunch of tools, we've built a bunch of blockchains, so we're actually able to sort of be a good. This is basically a really good alliance that we have. So we are able to sort of influence them and kind of share our take on what works and what doesn't work, right? So I think to answer your question, Martin, what do you wish banks understood better about stablecoin flows? I think banks are definitely becoming more understanding and accepting of what stablecoins are. Traditionally, crypto was once built to sort of break the banking system, right? But now it's actually not the case anymore. Banks actually do want to open up, do want to work with stablecoins, do want to invite their their normal customers to start investing in crypto ETFs as well. So I think now banks do understand that it is actually advantageous for the traditional banking customer or anybody to sort of also be able to operate outside of banking hours. So this is kind of where crypto stablecoin actually makes a lot of sense, where you can have this instant on-chain settlement, this sort of validation. So I think banks are definitely starting to recognize the tech more in sort of giving this more open flow of free money. So yeah, that's sort of my take. So I would say that they're definitely getting better with the right hands on board. A number of the biggest banks, are basically working with the top Web3 companies. So it's not like a single effort, but they're just trying to figure everything out themselves because they know it's not going to work. They are working with top leaders in the Web3 industry. So I think we are basically on good track to have, this sort of institutional adoption as long as other Web3 companies continue to push it, continue to fuel it. So, yeah.
All right. Thank you, Sam. So in the interest of time, I think, the session will be concluding, and want to give a big thank you to Larry, Sam, Dean, and Yudha for a genuinely useful hour, and to all of you, for your time and attention, and also the questions that you've sent in. So if you want to keep following what these four speakers are building, right, please feel free to reach out, connect, and engage on how they can kind of have any collaboration with you and your company. And of course, in upcoming episodes, we'll be having a lot more focus on APAC development, digital asset development in APAC as well, and with our upcoming episode actually on banking as well, right? So do stay tuned, right? And thank you, everyone. I'm Shan, APAC Director at Utila, and I'll see all of you at the next one. Thank you.
Thank you all so much.
Thank you all.
Thank you.
Bye-bye.
Thank you.